Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. First thing I want to say is apologies for not posting last couple of days. His work is absolutely crazy and I needed to take a little bit of time off just this weekend. So alhamdulillah, now I'm recording just after work and I'm exhausted, but you know what, show must go on. So I want to share with you today one company that a lot of you have asked me recently, and that's Home Depot. Home Depot has come down quite a bit in the last couple of days. In the last couple of months, it's not even just days. So since the beginning of the year, it's actually down about 11%. For the 1 year, it's down about 3%, and for the 6 months, it's down about almost 6%. For 1 month, it's down 7%. So I think that's probably what brought up. A lot of you have been asking, saying, can you have a look at it? So that's what we're going to do today. Right now, it has a PE of about just 18, and it's a huge company, 276 billion market cap. Is basically Home Depot is a reliable dividend payer with a reputation for strong growth, and it's always been that way. Okay, of course, the business is very cyclical, meaning, you know, depending on how the housing market is doing, how, for example, during COVID time, everyone was actually locked away. That meant we all, everybody went to Home Depot to make sure their houses look nice and everything else. So they benefited a lot from that. So that's why the stock was up quite a bit. The company actually does have a good return in comparison to the S&P 500. So when you look at the total return for the last 10 years against the S&P 500, the company has returned 351%, including dividends and price appreciation, as in comparison to the SPY, for example, the S&P 500, of total return of 180. So the orange line here has completely beaten or outperformed the S&P 500. Now that doesn't mean like going forward that's going to happen every single whatever years, but at least that gives us an idea. And it has come down from closer to $550 per share to right now where it is. Okay, sorry, I lied, because that is the percentage. Okay, the price at that time was slightly different. So at that time where we saw here is about $415 per share. That's where it was, and since then it's down about 31%, which is absolutely huge. Now their competitors, so remember, they are a home improvement company, and a lot of their products basically are what basic professionals use and normal people use, similar to Lowe's as well. That is their main rivals, if you like. So what I want to do now is I want to look at the financials and see if this company is actually a buy right now, and what the analysts are actually saying in the, for example, websites like, for example, Seeking Alpha, Morningstar, and so on. We want to see where they think the stock should be going and if it's a buy for us or not. Before we do that, as always, I would really appreciate it. It takes a lot of time to put these things together, and a lot of time to record it and edit it and then share it with you guys, because as you know, I've got a full-time job, and right now I came back from work absolutely exhausted, but I'm doing this to make sure that we, of course, stay consistent and we post as much as we can. So join us on the Discord if you haven't joined us, through the Patreon account, where you get access to a lot of things, including the Sharia compliance and all the dividend trackers and so on, and the stock watch list, as well as the daily watch list that we've created for both the UK and the US, InshaAllah. And of course, like the videos, 50% of you guys watch these videos do not even subscribe to the channel. Please do that if you can, of course. And yeah, let's see the rest of the information here. So like I said to you, it's basically home improvement company. It sells a lot of products, and as you can see, this here, it's been going down since the last 52 weeks. Basically, it's been going down and down and down. So right now is in its lowest. So we want to make sure, in fact, I want to actually check that. Let me see. 52-week low, it was 274. So it's not far off. It's about $6 off from that at the moment. So that's interesting. Okay. Currently trading 280, EPS of $16 per share, market cap about 286 billion market cap. It has a wide economic moat, and beta is below 1, which means basically it's not too volatile, if you like. PE right now 17, 18. So we've seen in Seeking Alpha forward PE of about 18. The 5-year average of the PE for this company is about 21. The S&P 500 right now is about 25, and the sector is about 23. Price to free cash flow right now we're looking about 25. So based on that, it seems a little bit expensive. Then in terms of dividend, this is where the company shines. As you can see right now, is almost 3%, and the payout ratio just above 50%, which is absolutely fine. The company has increased their dividend. Latest increase was 10%, and the 5-year growth rate is 16%, which is quite nice. They have increased that dividend for 14 years in a row. Annual payout is $8.36 for every single share of this company that you own. And dividend safety from safety dividend is right now 87%, and free cash flow right now we're looking at about $16 billion in the bank. This is a capital heavy company because they do actually open up new stores and all of that stuff, so they do use quite a bit of money, but $16 billion should cover a lot of that, as well as the dividends and so on. So we're not worried about dividend cuts anytime soon. In fact, the fact that they've increased it 10% recently and 16% in the last basically 5 years is absolutely amazing. Free cash flow yield right now above 3%. Normally we're looking at about 3%. It's almost double that. Okay, free cash flow margin of 11%. Normally we're looking at about 5%. So absolutely no issues from basically dividend and basically free cash flow side of things. Profit margin right now we're looking at about 10%. Operating margins of 14%, 15%. Return on invested capital over 2,000. Right now, total return in the last 10 years we're looking at about 16%, and return on invested capital we're looking at about almost 34%. Now, revenue in the last 5 years, the compounding annual growth rate of almost 10%, and current ratio is way above 1, which is quite good. So that means that in the next 12 months, anything happens to the company, they can basically pay off their liabilities and without having to worry about going to the bank and borrowing money or bankruptcy or anything like that. So next year, they're expecting the earnings to grow about 6%. And then after that, 3% every single year, plus the dividends, of course. Current share price of $280. Price from Morningstar, they say in their fair value is $263 per share, which is about 9% premium at the time of recording. Fair value is basically $325 from Simply Wall Street. They're saying it's about 11-12% basically discounted right now, or undervalued if you like. And then target for tip rank is actually basically almost a 21% upside from where it is, $348 per share. It's a moderate buy from them. It's a buy from Seeking Alpha, $345 right now, about 23% upside from where it is right now. So they kind of all agree at the same time, apart from Morningstar, which says it's a little bit basically expensive right now. But all of these companies have actually agreed. All of these analysts, remember, this is using intrinsic values, these two companies, and then basically these two are using basically next 12 months price targets, if you like. Now, in terms of Sharia compliance side of things, there's no issues with this company from basically business side of it, from interest-bearing debt to interest-bearing securities, and they are buying back their own shares. Okay, as you can see here, from basically 2014 to up to now, right now, they have been buying back their own shares, which is absolutely huge. So they're buying back their own shares. They've got quite a bit of cash. They're paying you about 3% dividend. The earnings basically are growing basically slightly. And this is the company that grows about 3% to 8%, 9% every single year. So they're steady Eddie kind of company. This is the type of company I like to own the portfolio because they have predictable business, if you like, number one. Number two, they have excellent free cash flow. The companies, like anybody that is doing any home improvement, whether they're professionals or basically individuals, it's basically this is where they go to buy their products. And for that reason, I like that predictability. I like the fact the company has loyal customers that will go back. But of course, it's a very cyclical business. If the housing market is booming, everyone is basically buying a house, everybody's renovating their houses and all of that stuff, the company will do well. If the economy doesn't do well and we get into recession and so on, of course the housing prices will come down. But again, this company will still be okay because some people will not buy new houses. They just renovate what they already have, not to the extent when they had extra cash lying around, but of course they will still be. And for that reason, this company will be absolutely fine. It's been through recessions after recessions for the last God knows how many years this has been in existence. So, and as the fact that it's actually seems quite cheap right now gives me an idea that I would like to add to this company. So starting this week, InshaAllah, I would like to add a little bit, maybe half a share, maybe one share. We will see what happens. But as you can see here right now, my average price is $287 per share. 280 is where the price is at right now. The difference is because my FX impact, I'm up about almost 7% or $211, 11 pounds right now. I'm basically because of that, and then otherwise I would have been down about 2%. So I'm kind of basically buying it is slightly higher from, like, basically, of course the average price is 287, but in terms of pounds 221, I would be up basically buying it in a little bit, you know, I'm not averaging it down, basically. That's what I'm trying to say. So yeah, I'm still happy with that. Inshallah, I'm gonna buy a little bit in the next couple of days and carry on buying. Like I've always said to you guys, this is, you always have to have a base stocks, companies that you know going to be in your portfolio for a long run, and this is one of those companies. Inshallah, if the business does not change or whatever, I'm willing to hold this company for at least the next 5 to 10 years, inshallah. And that's basically it. If you haven't joined us on the Patreon, please do it. That really helps. You can join the Discord, where there's a lot of great discussions. Apologies, I haven't actually contributed to anything in the last couple of days because it's been absolutely hectic, like I said, but I will be letting you know, inshallah, any buys, any sales in there. I will be updating all the stock watch list. I've got a video coming up about the UK stocks and things like that, inshallah. So I will be a lot more active, inshallah, in the next couple of days. But for now, have a wonderful day. Assalamu Alaikum.